All right, welcome back everyone for another deep dive. Today we're taking a close look at Heineken Malaysia's FY2024 financials.
Uh-huh.
And, I'm excited to get into these because you sent over their full financial report.
Yeah.
We have a nice little scorecard breakdown, which I know you love.
Big fan of the scorecard.
Some interesting press coverage about how their stock is doing,
Definitely.
and then a couple deeper dives into their debt and equity situation.
Lots to cover.
So I
Yeah.
think our mission today is to kind of piece all this together, see if we can
Yeah.
make sense of how Heineken Malaysia did
I think that's the goal.
in FY 2024. What's working for them? What kind of challenges might they be facing?
Absolutely.
So should we just jump right into the headline numbers?
Just do it.
Because I've got to say, just looking at this at first glance, it looks pretty impressive.
Oh, yeah. Definitely impressive.
Yeah.
Revenue up 6% to RM 2.80 billion,
Wow.
which is solid growth on its own.
Yeah.
But then you look at the profit, PBT, so profit before tax, up a pretty significant 14%.
Right.
And net profit has soared by 21%.
21%.
A whopping 21%.
Wow. The report says that's their highest ever net profit.
Yep.
So it sounds like they're doing a lot of things right, wouldn't you say?
There's a lot of things going right. It's a few factors all coming together, I think.
Okay.
They highlight effective commercial execution
Okay.
in their report.
So like making smart choices about how they're marketing and selling their product, is that?
Exactly. Making smart choices, right decisions at the right time.
Yeah.
They also benefited from a longer festive selling period this last year. And it's likely due to that early Chinese New Year in 2025.
Oh, that makes sense, yeah.
They could get a little extra boost at the end of their fiscal year.
Mm-hmm.
And also, it seems like, in general, consumer confidence is rebounding a bit, which always helps.
So speaking of doing things right, I always love looking at the scorecard.
Oh, yeah. Who doesn't?
And the scorecard that you send over gives Heineken Malaysia a 7.5 out of 10.
A very respectable score.
So what are we thinking? Is that a good score? What does that tell us?
A 7.5 in this kind of industry. I mean, it is competitive, beverages.
Yeah.
7.5 is pretty impressive.
Okay.
What's really striking is just that consistency across the board. Strong revenue and profitability, check.
Right.
They've also seen a really big improvement in their debt management.
Oh, okay.
Their debt-to-equity ratio went from 0.3138 down to 0.1675.
What does that actually mean? So, like, are they relying less on borrowed money?
That's exactly it. Yeah,
Okay.
relying less on borrowed money.
Okay.
They're in a more stable financial position.
That's risky.
Less risky, yeah. Okay, now,
Which is good news for investors as well.
yeah, break that down a little bit for those of us who maybe aren't quite as
For you.
financially savvy.
Yeah, so, like, imagine you're buying a house.
Okay.
If you can put down a larger down payment, you have a lower loan-to-value ratio.
Which means you have less debt compared to the value of your house.
Okay.
That's generally considered less risky.
Makes sense.
Right.
Yeah.
Companies are kind of similar.
Yeah.
That lower debt-to-equity ratio makes them more financially secure,
Okay.
less vulnerable to any kind of economic shock that might come along.
Gotcha. That's good news for investors.
Absolutely, and we see that reflected.
Yeah.
Heineken Malaysia's dividend hit a 10-year high at 155.6 cents per stock unit,
Wow.
and their share price is at a near 2-year high. So wins all around.
Wins for the company and wins for the investors. But,
Yeah.
as with any deep dive, we have to go beyond just those headlines.
We got to go deeper. Exactly.
So,
We have to look at what's driving that success,
yeah,
whether it's sustainable in the long term.
right.
So let's dig into some of those strategic initiatives that Heineken Malaysia has been implementing.
Okay. Where do you think is a good place to start with that?
Well, one area where they've been really active is new product launches. They've come out with some new offerings like Tiger Soju flavored lager.
Oh, yeah. I saw an ad for that, Tiger Soju.
Yep.
Very cool. Caught my eye.
And Edelweiss Peach.
Okay.
So clearly trying to tap into some evolving consumer preferences.
Yeah, keeping things fresh and interesting.
Particularly.
I know they've also been expanding their Drinkies platform as well.
Oh, yeah.
Convenience is king these days, right?
Absolutely. That focus on e-commerce and that on-demand delivery.
Yeah.
That's a smart move, showing that they're adapting to how people are shopping and consuming these days.
Absolutely. And, they're racking up some awards for brand strength
Yes.
and sustainability.
Uh-huh.
I see the Putra Brand Awards in here, the NDBC Awards.
Right.
Some recognition from the UN Global Compact Network, Malaysia, and Brunei.
They're doing well in that department.
It's interesting how they're connecting those two things.
Yeah.
brand strength and sustainability.
Yeah.
It feels like they're making a statement
It's a good message.
that they can be successful while also being responsible.
Yeah, walking the walk.
And they even have solar panels on their brewery, don't they?
That's right. That's just one piece of their broader sustainability program, though.
Oh, wow.
They've got initiatives focused on water conservation, responsible sourcing, and community engagement.
So it seems like they're really trying to live up to that
Yeah.
raise the bar on sustainability motto from their evergreen strategy.
That's right.
So we're seeing them making some smart moves,
Yeah.
adapting to the market, showing a real commitment to sustainability.
Yeah. They're ticking a lot of boxes.
It feels like everything's coming up roses for Heineken Malaysia.
It does.
But you know what that means, right?
Ah.
There's got to be a but coming.
What's the catch?
What are the challenges that they need to watch out for?
Yeah, you were right to be cautious.
Yeah.
It's not all smooth sailing.
Right.
While the performance is strong, they're not immune to external factors. So for one, you've got that global economy.
Right.
Still a little bit shaky. There's volatility out there.
Yeah. And for a company like Heineken Malaysia, are there specific things in the global economy that really could impact them?
The thing that comes to mind is you always have that looming issue of potential changes to excise duties.
Okay, by the Malaysian government, right?
Exactly.
Like,
Which, I mean,
that's a constant concern for the industry.
it sounds like they got a break this year.
They did.
But yeah.
But it's something to keep an eye on.
And I know another challenge they're facing is that competition from illicit alcohol.
Oh, yeah.
Which they've been very vocal about.
They have. They're fighting that good fight.
Yeah, and they're working to combat that, right?
They are. They're working closely with that multi-agency task force to address it.
Okay.
But here's where things get a little interesting.
Okay.
Despite that impressive profit growth, their net cash from operating activities actually decreased year on year.
Wait, so their profit went up, but they have less cash flow? Less cash coming in from their operations, yeah.
How does that work?
That's the million-dollar question.
Yeah.
And it suggests there might be more to the story than what we're seeing on the surface.
Okay, now I'm intrigued. We've got a little bit of a mystery on our hands.
A little bit of a mystery.
So where do we go from here? Are there other clues that we can uncover in this stack of documents?
I think so.
Okay.
Do you remember how the financial report mentioned capital commitments for property, plant, and equipment?
Yes, it said something about RM 10 million.
RM 10,208,000 to be exact.
Okay, so could that be connected to that decrease in cash flow?
It very well could be.
Okay.
If they're investing heavily in things like upgrading their facilities or buying new equipment, that could explain why their cash flow from operations is down even if they're still profitable.
So it's kind of like if you have a business and you're making money, but you decide to renovate your store to attract more customers.
Exactly. You're spending money to make money.
Yeah, you might have less cash on hand right now, but you're hoping that that investment pays off down the road.
Long-term thinking.
So for Heineken Malaysia, investing in their production capacity or maybe streamlining their operations
could be
a smart move for that long-term growth.
Makes sense.
So it's all about finding that balance between managing that current cash flow and then making those strategic investments for the future.
Absolutely.
So maybe we haven't completely solved the mystery yet, but we have a pretty good lead here.
We're on the trail.
It sounds like they're managing their debt responsibly, they're investing in their future, and they're still turning a healthy profit.
Yeah, can't argue with that.
Overall, I'd say Heineken Malaysia is in a pretty good position.
I'd agree. They've taken steps to really solidify their financial foundation.
Okay.
But as we discussed earlier, they're not operating in a vacuum.
Right.
You know, that global economic climate, potential changes in government policies, and even just shifting consumer preferences. They all play a role.
So we've explored the numbers, but what about the bigger picture?
Yeah.
Their overall strategy, the brand, the commitment to sustainability. How do we get the full story?
Well, I think those press releases you sent over will be very insightful.
Okay.
We can see how Heineken Malaysia is communicating its message and how those initiatives are playing out in the real world.
All right, let's dive into those press releases and see what they reveal about Heineken Malaysia's overall approach.
Sounds good to me.
All right, listeners, stay tuned. We'll be right back. Okay, so we're back, and we're trying to solve this cash flow mystery, right?
We're on the case.
We're diving into Heineken Malaysia's debt and equity situation to see if we can find any clues.
Okay.
So what should we be looking for here?
Well, you know how we talked about the importance of looking beyond just profitability?
Uh-huh.
Company's financial health, it's faceted.
Yeah.
We have to consider their solvency,
Okay.
their ability to meet their long-term debt obligations.
Okay.
That's where debt and equity come into play.
Gotcha.
And then there's liquidity.
Okay.
Basically having enough cash on hand to manage those day-to-day operations.
So even if a company is profitable,
Right.
if they're not managing their debt well or they don't have enough cash coming in,
Exactly.
they could still be in trouble.
Potentially, yeah.
Okay, that makes sense.
So that's why this decrease in cash flow from operations is worth exploring.
Even with all the positive news.
Even with all the good stuff, yeah.
This analysis of their debt-to-equity ratio, maybe that'll give us some insights.
Hopefully.
Okay, so talk me through this. How's their debt situation actually looking?
Well, the good news is their debt-to-equity ratio has significantly improved.
Okay.
Remember how it was 0.3138 at the end of 2023?
Uh-huh.
Well, it's down to 0.1675 at the end of 2024.
So that sounds like a positive step.
Definitely a step in the right direction.
They're using less debt to finance their operations.
Yeah, less reliance on borrowing.
I think putting down a big down payment on a house.
Exactly.
Less risky.
Less risky.
Okay.
And if we break it down even further, it seems like they've been actively reducing their debt.
Okay.
Particularly short-term borrowings.
Okay.
At the same time, their equity has actually increased.
Oh.
Mainly due to those healthy retained earnings.
So they have more profit.
Yeah.
So they have more to reinvest in the business.
Exactly.
Less debt, more equity. All of that sounds positive.
It's looking good.
For their long-term prospects.
Yeah.
But how does that explain that decreasing cash flow from operations?
Yeah.
Shouldn't those positive changes be boosting their cash flow?
You would think so, right?
Yeah.
It's a great question. And unfortunately, this particular document doesn't give us the complete answer.
Okay.
It focuses mainly on their debt and equity structure.
Gotcha.
Not the specifics of their cash flow statement.
So close yet so far.
I know.
It feels like we're missing a piece of the puzzle.
A crucial piece.
Any ideas where we could look next?
I think so.
Okay.
Remember that mention in the financial report about capital commitments?
Yes. For property, plant, and equipment.
Yes.
It was like RM 10 million.
Right. Could that be connected?
Do you think that could be connected?
It's a strong possibility.
Okay.
If they're investing heavily in things like upgrading their facilities, buying new equipment, that could explain why that cash flow from operations is down, even though they're profitable.
So it's like that business owner who decides to renovate their store, attract more customers.
Yep.
They're making good money, but they got to spend some of that money to improve.
On improvements.
Yeah, for the future.
For the future.
Okay.
So for Heineken Malaysia, investing in their production capacity, streamlining their operations, could be a smart long-term move.
So it's finding that balance between managing the current cash flow and then making those investments for the future.
It's a balancing act, for sure.
Okay, so we might not have fully solved the mystery, but we have a pretty good lead.
We're getting warmer.
It sounds like you're managing their debt responsibly. They are investing in their future.
Yeah.
And they're still making a profit.
Can't beat that.
Overall, I'd say Heineken Malaysia is in a pretty good spot.
I would agree. They've taken steps to really solidify that financial foundation.
But they're not operating in a vacuum.
Never.
Like you said, that global economic climate, potential changes in government policies, even shifting consumer preferences, it all plays a role.
Absolutely.
So we've explored the numbers.
Yeah.
But now I'm curious about the bigger picture.
Okay.
Their overall strategy, the brand, that commitment to sustainability.
Right.
Where do we go from here to get the full story?
I think those press releases you sent over will be very insightful.
Okay.
We can see how Heineken Malaysia is communicating its message and how those initiatives are playing out in the real world.
All right, let's dive into those press releases then and see what they reveal about Heineken Malaysia's overall approach.
Let's do it.
All right, I'm looking through these press releases and wow, I'm pretty impressed by just how many awards and recognitions Heineken Malaysia has gotten.
Yeah, they've clearly made an effort to build a really strong brand reputation.
Yeah.
Both for the quality of their products, but also their commitment to responsible business practices.
You've got the Putra Brand Awards. Heineken, Tiger Beer, and Guinness all won gold.
Triple threat.
Then there's Edelweiss, winning bronze at the Putra Aria Brand Awards for the second year in a row.
2 years running, that's impressive.
And their Drinkies platform, 2 wins at the Asian Experience Awards.
That's right.
It seems like those investments in digital innovation and convenience are really paying off.
Yeah, you mentioned earlier that consumers are increasingly looking for that kind of seamless and convenient experience, and Heineken's clearly tapping into that.
They're not just focusing on technology and product launches, though.
No, they're not.
They're also investing in their people.
That's right.
Their Star Academy has trained something like 10,000 bartenders nationwide.
That's a lot of bartenders.
Yeah, it's one thing to have a great product, but you also have to make sure that it's being served properly to maintain that brand consistency.
Exactly. It's all connected.
And they're getting results. Remember that Malaysian bartender who won the Heineken Global Draft Championship in Amsterdam?
How could I forget?
It just shows their commitment to nurturing talent and fostering a culture of excellence.
Absolutely. And it all ties back to that evergreen strategy we talked about earlier.
Right, that long-term plan.
Aiming for superior growth, funded through cost optimization, but also raising the bar on sustainability and responsibility.
It seems like they really have found a way to balance those financial goals with their social and environmental commitments.
Yeah, it's not easy to do, but they seem to be making it work.
And their sustainability efforts, they go way beyond just installing solar panels at the brewery.
Oh, for sure.
Water conservation, responsible sourcing, they're advocating for responsible consumption, supporting local communities.
They're making a big impact.
And a significant financial contribution, too.
That's right.
They paid something like RM 1.4 billion in taxes last year.
More than half their total revenue.
That's a huge amount of money going back into the Malaysian economy.
It's a serious commitment.
Really highlights their role as a responsible corporate citizen.
Definitely, they're giving back.
And they're getting recognized for it, too. That Best Sustainable Built Environment Award from the Malaysia Dutch Business Council.
Yeah.
And they were commended for their water resilience and SDG reporting at the UN Global Compact Network Awards.
It's great to see them getting those accolades.
So they're getting recognized from both the business world and international organizations.
For doing the right thing.
It seems like they really have found that sweet spot, balancing financial success with social responsibility.
It's a delicate balance for sure.
Of course, there will always be challenges.
Always.
That consumer landscape's constantly evolving.
Oh, yeah.
Global economy can be a bit unpredictable.
Oh, yeah.
Always the possibility of some regulatory changes.
You never know what's around the corner.
But from everything we've seen in this deep dive,
yeah,
I'd say Heineken Malaysia is well prepared to face those challenges.
They've got a solid foundation.
They've got that solid financial base, a clear strategic vision.
Absolutely.
Genuine commitment to sustainability.
And a passion for good beer.
This deep dive has been really fascinating.
I agree.
They're achieving impressive growth while making responsible choices.
Makes you wonder if other companies could learn from their example.
Can they maintain this balance as they continue to grow?
That's the big question.
It's been a really interesting look at Heineken Malaysia.
Definitely insightful.
They're setting a great example.
For sure.
And that's it for this deep dive. We hope you enjoyed this exploration of Heineken Malaysia's performance and their commitment to sustainability.
Thanks for joining us.
As always, keep those deep dive requests coming. We love exploring new topics and sharing what we find.
Until next time.
Happy learning, everyone.